Welcome back to the Deep Dive. Today we're taking on a massive topic, not just how to make a living, but how to build serious, life-changing wealth. The kind of wealth that offers real freedom and control.
Yeah, it's a goal so many people have, right?
Yeah.
But often the sheer volume of advice, all the different strategies, maybe even conflicting ones,
hmm
it can feel completely overwhelming.
Exactly, or just out of reach. And honestly, who really has the time to read, dozens and dozens of books, test everything out, and figure out what actually works in the real world?
It's a huge undertaking.
Well, for this deep dive, we've kind of got a fantastic shortcut. We're drawing on insights shared by someone who synthesized the core lessons from reading 40 key books on money and success over many, many years.
And crucially, this isn't just theory.
No,
These are lessons distilled from actually building significant wealth through real businesses, not just online stuff, but brick and mortar type operations.
that distinction feels really vital, doesn't it? It's knowledge earned, in the trenches.
Proven principles, not just academic ideas.
Absolutely.
Yeah.
So our mission for you today is to unpack those core principles. We're going to follow a framework based on the synthesis, breaking down the whole wealth building journey into 3 distinct, hopefully achievable stages.
Making it manageable.
Think of it as your accelerated guide, really pulling out the most impactful nuggets from those 40 books, specifically tailored to help you understand the path from zero all the way up to $10 million and maybe even beyond, and do it, quickly but thoroughly.
Okay, so let's start right at the beginning of that path, level 1.
All right, let's dive into level 1. This is that foundational stage, the journey from $0 up to that crucial first $100,000. And the focus here is intensely personal. It's about building a strong foundation through your mindset, your habits, and understanding the absolute basics of personal finance.
And the very first, maybe the most critical step identified in this synthesis is mastering your mind. I mean, books like Secret to the Millionaire Mind really highlight how deeply our upbringing, our early experiences program our beliefs about money. Maybe you heard things like, money is the root of all evil, or rich people are greedy. Those kinds of ideas. They can create powerful internal barriers.
They really can. It's like they sabotage you before you even properly start. It's about spotting those negative beliefs and, overcoming them. The ones that make you feel almost uncomfortable about wanting wealth.
Exactly. And once you start chipping away at that internal resistance, you need to understand why you're even doing this. What's the motivation?
What's the driving force?
Yeah. The psychology of money gets into this, suggesting the core drive often boils down to either freedom or control. You want the ability to make choices without financial constraints, maybe control your time, your life.
Makes sense.
But this book makes a point that really flips conventional thinking. True wealth isn't actually about the flashy things you buy.
Oh, interesting. You mean like the expensive car or the big house?
Precisely. The author argues that real wealth, the kind that provides that freedom, is often what you don't see. It's the money saved, the investments quietly working, the delayed gratification.
Mm-hmm.
It's choosing not to spend on conspicuous consumption, letting that money grow instead. That's a huge mindset shift right there.
Yeah. That's fundamental. And linked right to that is believing that significant wealth is even possible for you in the first place. The synthesis brings in the magic of thinking big here,
Right.
which observes that so many people limit themselves right from the start. They set their goals too low, aiming for comfortable or okay, essentially putting a ceiling on their potential before the climb even begins.
It's like setting the finish line way too close, thinking big, having that ambitious goal. Yeah, well, it isn't a guarantee of success, obviously, but it's presented as an absolutely necessary first step.
a prerequisite.
Yeah. If you don't genuinely believe reaching a high level is possible for you, you probably won't even take the necessary steps to get there.
Okay, so you start recalibrating the mindset, thinking bigger, clearing out those old limiting beliefs. How do you actually build the momentum to start moving forward? The next crucial takeaway for level 1 is embracing something called the winner effect.
Ah, yes, the winner effect. It explains this phenomenon where achieving small wins actually builds confidence. It creates a positive feedback loop that kind of propels you forward.
Like success breeds success.
In a way, yes. It even cites studies suggesting a correlation with physiological factors, like testosterone levels in high performers, like traders. Winning itself might increase certain receptors in the brain associated with success and motivation.
Wow, that's fascinating. So it's not just psychological. There might be a biological element too.
Seems like it. And the actionable lesson here is simple, but really powerful. Deliberately set small, achievable goals, daily, weekly, whatever works. Getting those little wins consistently builds your confidence and makes tackling the bigger goals seem, well, less daunting.
Okay, that makes sense. Build momentum bit by bit.
And tied directly into that momentum is having an undeniable need to succeed, not just, a passive wish. There's that story from Think and Grow Rich.
Oh, the ships.
Yeah, the commander who burned his army's ships after landing in enemy territory. No possibility of retreat. They had to win. And they did.
That image really sticks with you. It highlights the danger of having an easy escape route or just being too comfortable where you are.
Exactly. The source material notes this idea echoes in books like Unscripted, suggesting society can sometimes condition us into being comfortable, maybe dependent, lacking that fierce drive.
Right.
Overcoming that inertia requires generating some internal pressure, managing the inevitable stress, and developing unstoppable habits.
Which leads us perfectly to the next set of principles for level 1. Developing those powerful, actionable habits that actually support your goals. Stress management is huge here because, let's face it, building wealth isn't stress-free.
Definitely not.
The essence of success is this great analogy. Imagine a vast fog of stress. Now, picture all that water condensing down into a single glass. You can metaphorically drink that water, focusing only on the controllable bits within that glass and using that focused energy as fuel.
That's a great reframe. Turning stress from an obstacle into something you can channel. And building on that, Atomic Habits gives you the blueprint for how to actually build those habits.
The practical how-to.
It emphasizes focusing on the process, the daily actions you take, the things you can control, rather than getting overwhelmed by the distant end goal, which often feels uncontrollable.
And techniques like habit stacking.
Yeah, that's a key one. Pairing a new habit you want to build with an existing one you already do automatically makes starting much easier.
Focusing on the process keeps you moving. But action without direction, that can be wasted effort, right?
Absolutely. The 7 Habits of Highly Effective People stresses the importance of beginning with the end in mind, knowing exactly where you're going, maybe even how you want to be remembered. That clarity provides a filter for decisions and a powerful why.
Knowing your why is foundational. But to inject some urgency, the 12-week year concept is brilliant.
Oh yeah, treating a year like 12 weeks.
Exactly. It creates this heightened sense of pressure and leverages the fact that, honestly, a lot of us perform exceptionally well under a tight deadline.
It really amps up the focus. And to manage all the tasks and complexity that come with ambitious goals, the art of getting things done offers simple but transformative advice. Get everything out of your head.
Write it down.
Write it down, put it in a system. This frees up so much mental RAM, helps you prioritize, and make sure you're spending your limited time on what truly matters most.
Which brings us right to a core principle from essentialism.
Saying no.
Valuing your time and learning to say no. Every time you say yes to something, you are inherently saying no to countless other things you could be doing with that time. At this level, you have to protect your focus ruthlessly.
You really do. And building those habits, protecting that time, allows you to then acquire skills that have real value in the world. This is the next key piece for level 1, acquiring high-value skills and doubling down on your natural strength.
And the synthesis here, notably, pushes back against that common advice we always hear. Follow your passion.
Yeah, that feels almost like heresy today, doesn't it?
It does. Why challenge that?
Well, based on the research presented in So Good They Can't Ignore You, the finding is that for many people, passion, that love for their work, isn't something they started with.
Okay.
Instead, passion often develops as they gain mastery, as they get really, really good at something valuable and build expertise. The passion follows the skill.
Okay.
Oop.
So get good at something valuable first, and the passion might actually follow that competence.
That's the idea. And in terms of what skills, the principle from the unfair advantage is crucial here. Identify your natural strengths. What are you already disproportionately good at compared to most people? Lean into that.
Play to your strengths. Makes sense.
That's where you'll likely gain traction fastest. And as the world changes, especially with AI becoming so prevalent, just having one skill often isn't enough anymore. The synthesis draws lessons from books like Mastery and Steal, like an artist, to emphasize building a unique stack of interconnected skills. It's about learning from multiple sources, copying techniques, and combining them in a way that's really difficult for others, or even AI, to replicate easily.
Building that unique skill stack increases your earning potential at level 1, but just earning a high income, that alone doesn't build wealth unless you understand the fundamentals of personal finance.
Which is the final critical piece for hitting that first $100,000.
And the absolute bedrock lesson emphasized by mentors in books like Rich Dad, Poor Dad is that simple distinction between an asset and a liability.
It sounds basic, but it's profound. An asset puts money in your pocket. A liability takes money out of your pocket.
Like your car is usually a liability.
Usually, yes. Your primary home, often a liability because of mortgage, taxes, upkeep. A rental property, if structured correctly, can be an asset. The goal for building wealth is just relentlessly acquiring assets, as many as possible.
And the single most powerful force in building those assets over time, compound interest.
Oh, definitely. The compound effect illustrates this so well with that penny analogy.
The penny doubling every day.
Yeah, a single penny that doubles every day for 31 days versus taking, say, $3 million cash up front. That penny looks like nothing for the first couple of weeks.
Right, it's tiny.
But by day 31, it's worth over $10.7 million. It just highlights how patience and consistent compounding growth are absolutely key.
Seeing that growth potential is exciting, but jumping into investing without a plan can be dangerous.
Very. And the source material here leans heavily on the principles of the Little Book of Common Sense Investing. It makes a really compelling case that trying to pick individual stocks or time the market, well, it's usually a losing game for the average investor.
So that's a common sense alternative then.
Essentially owning the entire market. Typically through low-cost index funds like ones tracking the S&P 500, the data is pretty stark. Over a 35-year period, something like only 1% of actively managed mutual funds actually beat the market index by even 2% annually.
Wow, only 1%.
Yeah. So for most people at this stage, simplicity and consistency usually beat complexity in trying to speculate.
That takes a lot of stress out of it too. And the intelligent investor provides that great mental model for dealing with market swings. Mr. Market.
Right. The moody business partner. Imagine an irrational partner in your investments who shows up every single day, offering wildly different prices based purely on his mood, not the underlying value of the business.
So the lesson is?
Ignore Mr. Market's daily whims. If you've bought solid assets you're prepared to hold for the long term, focus on the business, not the noise.
And for a more relatable starting point, One Up on Wall Street has that advice about looking at companies you already know and like.
Yeah, exactly. If you love a particular store or you use a product every day, you might actually have an advantage in understanding that business compared to some obscure company you know nothing about. Your real-world experience can be a useful springboard for research.
Okay, so all these principles for level 1, the mindset shifts, the habit building, acquiring skills, the financial basics, they really form the bedrock.
They're the foundation.
But the critical point, emphasized again and again in this synthesis, is just reading about them isn't enough. You absolutely have to apply this knowledge. Take action. That's the only way to actually build wealth.
Information without implementation just doesn't yield results. Simple as that.
All right, so once you've built that solid $0 to $100,000 foundation, you've worked on your internal game, built strong habits, developed valuable skills, started acquiring basic assets, you're ready to graduate, you're ready for level 2.
Moving up.
This is the stage of climbing from $100,000 up to $1 million. And the focus here shifts pretty dramatically. It's towards generating value beyond simply trading your time and really building a foundational business engine.
Because the fundamental limitation you eventually hit at level 1, even if you're great at your job or highly skilled, is that your income is directly tied to the hours you can personally work.
There's a ceiling.
There's an inherent cap. Yeah.
So that's where the cash flow quadrant becomes essential, right?
Absolutely. It lays out the 4 ways people earn income. As employees, E, self-employed or specialists, S, business owners, B, or investors, I.
ESBI.
Right. And earning wealth beyond that first $100 K usually means moving to the right side of that quadrant, becoming a business owner or an investor. That's where you can leverage other people's time or other people's money.
Okay, moving to the B or I side lets you generate income that's not directly tied to your own hours.
Exactly. And the 4-hour work week, while maybe a bit provocative in its title, challenges the conventional definition of rich. It introduces the idea of relative income being more important than absolute income.
Say that again. Relative versus absolute. How does that work?
Well, think about an investment banker earning, say, $500,000 a year, but grinding out 80 hours a week. Their effective hourly rate is about $120.
Okay.
Now, compare that to maybe an e-commerce entrepreneur earning $100,000 a year, but only working 20 hours a week. Their hourly rate is $100. The banker makes more absolute money. Sure.
Right, 5 times more.
But the entrepreneur arguably has a higher relative income based on the time they put in. Plus, They potentially gain huge amounts of freedom, control over their time, location independence.
Ah, okay. So wealth at this level becomes much more about gaining control over your time and location, not just the gross income number flashing on a screen. It's about building a lifestyle that the money supports.
Exactly. It shifts the whole perspective from just accumulating money for its own sake to accumulating wealth specifically to buy back your freedom and control.
Got it. So how do you start building the engine to achieve that kind of freedom? The next key takeaway seems to be finding your unique business idea and, crucially, executing on it.
Yeah, execution is key. Books like 0 to 1 suggest that truly successful breakthrough businesses often start by identifying what they call a contrarian truth.
A contrarian truth.
Something that is true and important, but that very few people actually believe. Think of Netflix betting people would prefer streaming over going to Blockbuster, or Airbnb betting people would happily stay in strangers' homes. Those were contrarian ideas at the time.
Okay, but finding an idea like that feels like waiting for a lightning bolt.
It doesn't have to be. Disrupt You offers a really practical method. For a month, write down 3 things that genuinely annoy you every single day. Just small frustrations.
3 annoyances a day.
Yeah. Then, for each one, just brainstorm quickly how it could be done better. Do that for a month, and boom, you've got 90 potential business ideas addressing real frustrations people actually experience.
That makes the idea generation process feel much more tangible, less like magic.
Totally. And once you have an idea or even a few possibilities, the synthesis stresses, echoing the lean startup, that execution is profoundly more important than the idea itself.
So a mediocre idea executed brilliantly.
Beats a brilliant idea executed poorly almost every time.
And the lean startup provides that framework for execution, the build, measure, learn feedback loop.
Right. You build a minimal version of your product or service, the MVP. You measure how customers actually interact with it, what they like, what they don't. You learn from that data.
And then you adapt.
You adapt, you iterate, you maybe even pivot if your initial assumptions were way off. It ensures you're building something people actually want, not just something you think they want.
Okay, so as you're building this business engine, another key principle for level 2 is strategically creating what's called a blue ocean and leveraging scarcity.
Yeah, blue ocean strategy makes this powerful distinction. You can compete in a crowded, bloody market where everyone's fighting fiercely over the same customers. That's a red ocean.
Sounds stressful.
It is. Or you can create a new market space, uncontested territory, with little to no direct competition. That's a blue ocean.
And the benefit?
Well, a cited study shows businesses that create blue oceans generate significantly higher profits, like 61% versus 39% for those in red oceans, and often dominate their new market for 10, 15 years.
Wow. So instead of fighting head-to-head, you essentially create your own category. How do you then generate demand when you're maybe creating something new?
One way is by consciously leveraging scarcity and desirability. The classic example is always Ferrari. They famously produce fewer cars than the market actually demands.
Right, they could sell more.
They could, but they don't. This isn't just about being exclusive. It actively maintains high desire, keeps the perceived value up, and supports premium pricing. Becoming oversubscribed, where demand outstrips supply, creates powerful momentum.
And when you're trying to tap into that demand, even a really old-school, expensive advertising book like Breakthrough Advertising offers a core lesson that's still relevant today.
You can't create desire.
Exactly. Your product or service has to tap into desires that already exist deep within the market. Your job is to channel those existing wants and needs, not try to invent new ones out of thin air.
Level 2 is really all about building that engine, the business that generates income and value independent of your direct time input. It sets the stage for real scaling.
Okay, let's move to level 3 then. Scaling from $1 million up to $10 million and, well, beyond. This level focuses heavily on influence, leadership, building truly scalable systems, and deep, deep specialization.
Yeah, at this scale, you're no longer just managing yourself or maybe a small team. You're leading larger groups, you're impacting broader markets. So the first crucial takeaway is mastering influence and effectively working through other people.
Like you see with figures like Elon Musk.
Exactly. He's not just a brilliant technologist. He has this incredible ability to inspire thousands of people to work towards these seemingly impossible visions. Influence. The psychology of persuasion is highlighted as a key resource here.
And a fundamental principle for building that influence and trust.
It often comes down to giving value first. There's a simple analogy used, like a model shop offering quick, free repairs on small things. It builds goodwill, demonstrates expertise without immediate expectation.
So people trust you.
Right, it builds reciprocity. People naturally want to work with or buy from those who've already provided value to them.
Managing relationships at this level must get complex, especially when you have a very clear, maybe even non-negotiable vision.
It can be. Never Split the Difference, which is actually a book about hostage negotiation techniques applied to business, offers this concept of tactical empathy.
Tactical empathy.
It's not about agreeing with someone. It's about genuinely understanding and being able to articulate their perspective, their feelings, their situation, even if you strongly disagree, in order to build rapport and eventually guide them towards understanding your position.
That requires real emotional intelligence.
Definitely. And understanding basic human psychology is paramount. How to Win Friends and Influence People, though old, distills these fundamental truths like the fact that people crave being heard, they want to feel important, and they fundamentally dislike being told flat out that they are wrong. Navigating those dynamics is essential for effective leadership.
And when it comes to actually communicating your vision or persuading investors or teams, Pitch Anything offers a useful model of the brain.
The three brains idea.
Right. Yeah, simplifying it into layers. The primitive crop brain focused on survival, emotion, is it dangerous? The midbrain, and then the logical neocortex.
And the key takeaway.
To truly persuade, you have to break through that emotional, often skeptical crop brain first. You need simplicity, strong emotion, maybe visuals, something novel, before you can effectively engage the logical neocortex with all your facts, figures, and rational arguments.
Get past the gut reaction first. Makes sense. Mastering influence obviously impacts your ability to lead effectively, which is just a prerequisite for scaling to this level.
And Start with Why introduces the golden circle.
Right. Why, how, what? Great leaders, the ones who truly inspire, start with the why, their purpose, their belief. Then they explain how they'll achieve it, and only then the what, the actual product or service.
Whereas most communication just starts with what we do.
Exactly. The book contrasts this with maybe teachers who just state what to do. Mentors, like great leaders, inspire with the why and provide guidance on the how. It's much more powerful.
It really makes the what's meaningful and drives that inspired action from others.
For sure. And, at this level, there's also an acknowledgement of the sometimes calculated nature required in leadership. The synthesis draws a reference from the 48 Laws of Power, specifically Law 11.
Which is?
Learn to keep people dependent on you.
But isn't that risky? Making people dependent.
Well, it is risky, especially for the business. While an individual employee might gain personal power by making themselves irreplaceable, the synthesis points out a crucial danger. A business that becomes overly dependent on any single irreplaceable person or even a small group is incredibly vulnerable.
Right, if they leave.
The whole thing can collapse. So that highlights the crucial shift you need to make. You must build a business that can run independently of any single individual, and that includes yourself eventually.
Which brings us squarely to the next key takeaway. Building scalable systems, not just adding more people to what is essentially still a job.
Right.
The statistic that, 80% of new businesses fail? It's often linked to the entrepreneur not understanding this difference.
The E-Myth is absolutely essential reading here. It differentiates brilliantly between a technician and an entrepreneur.
Okay, explain that.
A technician is great at doing the work. Maybe they're an amazing baker, fantastic at making cakes. An entrepreneur knows how to build a profitable system for making and selling those cakes that other people can operate successfully. Many brilliant technicians start businesses based purely on their skill, but fail because they never build the operational, marketing, financial systems around it.
They just end up creating a high-stress job for themselves, or maybe a collection of jobs for others, instead of a true business engine that can grow without them.
Precisely. And crucial to building that profitable system is ensuring profitability right from the start, not just hoping something's left over. Profit First offers this really counterintuitive accounting method.
Instead of sales minus expenses equals profit.
It flips it. Sales minus profit equals expenses. You allocate your desired profit first, take it out, and then you're forced to figure out how to run the business on the remainder.
Right. That fundamentally changes how you approach managing cash flow and forces discipline. It ensures profitability isn't just a hopeful afterthought.
Makes it deliberate. Okay, the final critical element discussed for breaking through to that $1 to $10 plus level is specializing deeply. What Good to Great calls the hedgehog concept.
The hedgehog concept, like the spiky animal.
Exactly. The idea comes from an ancient Greek parable. The clever fox knows many things, tries various tactics to catch the hedgehog, but the hedgehog knows one big thing.
Rolling into a ball.
Right. It uses its single, potent, tried and tested strategy repeatedly and successfully. For businesses and individuals aiming for significant long-term wealth, it means finding one specific niche, no matter how seemingly small, and becoming the absolute, undeniable best in that narrow field.
So instead of trying to be pretty good at many things, you become truly world-class at one very specific thing. That intense focus lets you dominate and command premium value within that niche.
Precisely. Being the undisputed best in a niche, even something really specific, like, say, high-end radio-controlled model components, can lead to sustainable, long-term wealth far more reliably than being merely average in a huge competitive market. Focus wins.
Now, the synthesis does briefly touch on one more layer, but it's mainly relevant for those who've already achieved truly significant wealth, right? Like north of $10 million.
Yeah, at that level, worrying about large-scale macro trends, global economics, world events, it becomes more relevant. Either because your wealth is significantly exposed to those global shifts, or maybe because you now have the resources to potentially influence or navigate them differently.
And books like The Fourth Turning or The Changing World Order offer perspective there.
Right. They look at recurring historical cycles, the rise and fall of global powers. They can offer valuable context for big picture strategic thinking at that level of wealth.
But the key takeaway here is that before you reach that significant wealth level, getting bogged down in complex macroeconomics is probably a distraction from the core work needed at levels 1, 2, and 3.
Absolutely. Focus on the controllable factors relevant to the stage you're actually in. Build the foundation, build the engine first.
So there you have it, a pretty deep dive into the core principles for building wealth, drawing from that synthesis of 40 key books and, importantly, real-world business experience. We've journeyed through those three crucial levels.
The foundation, the engine, the scaling.
Right. Establishing the $0 to $100 foundation with mindset, habits, skills, finance basics. Then building that $100 to $1 business engine by generating value beyond your time and finding your market. And finally, scaling from $1 plus through influence, leadership, robust systems, and that deep specialization.
It's a comprehensive roadmap, really. But the absolute core message that underpins all of it, that came through again and again, is that just reading about these principles, just knowing them, that isn't the goal.
It's not enough.
Not even close. Success, actually building wealth, comes from applying these principles consistently, day in, day out. It's about mastering yourself first, then relentlessly creating value for others, building intelligent systems around that value, and focusing your limited energy where it yields the greatest results.
It's a lot of powerful information condensed from literally years of reading and hard-won experience. So, as you, listening, reflect on your own journey and where you are right now on this path, maybe consider this question. Which of these wealth levels are you currently focused on? And what is the single most important principle or takeaway from this deep dive that resonates most strongly with you as the very next most impactful step that you need to take?
What's the one action you'll commit to implementing based on what you've heard today?
Okay, that's our deep dive for today. Thank you for diving deep with us.